Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, June 29, 2015. Holy cow, what a day on Wall Street and the markets today. We had a bloodbath out there today. The S&P was down 2%, and that was more than I expected, obviously. I've been telling you that I didn't think the red line here would get breached, and I was wrong, and that happens, and that's why this business is not an easy one. However, what I did tell you is that if it was breached, here, where would your next level be? Right at the 200, and then underneath at 204.50, and that's basically where we came today. So not surprising where we stopped. A little surprised how far we came today, but that's the way markets work, right? We're not going to be right every time. Nevertheless, we're still in a window right here, right now, where the market should turn, okay? So in a way, it's better that we didn't just float around because there would be no way to tell which way it was going to turn. Now that we're down, I'm pretty confident that we're going to turn. And it may not happen tomorrow. It may happen Wednesday. But if we don't turn by Wednesday, then I'm wrong. It's just that simple. Okay, so, we'll obviously keep talking about it. But nevertheless, this is where we are. And it was a bloodbath out there today. And it was a trend day down. And it just was persistently down. If you want to look at the 10-minute chart, you'll see what I'm talking about. I mean, there's very few bounces in here along the way today. Everything was sold into. This is one of those days where you just have to get out of the way. If you're an intraday trader, you have to just let it happen and just let it fall. And that's pretty much the way it happens today. So back to the daily chart. Your next level of real good support should be 204.50. Beyond that, well, then you're looking down here at probably 202. And I'm going to put that in because we're close enough now where we need to know about it. Okay? So if we just flip over to the E-mini contract, if I can get it to populate here we go. What you're looking at here is, remember, I'm sure that I mentioned, I don't remember exactly when or what video it was in, but I know I mentioned that there was a 2055 on the downside. And obviously that was hit today and then some. Well, there's also a 2035, which just so happens to be the 200-period moving average. So that's going to provide a really solid level of support. So we're going to put that one in. Okay, so whoops, that wasn't it. I calculated that this afternoon, and 2035. Okay, so those are our numbers, and if we do make the turn, it should be the beginning of the final rally into, let's say, the end of July, early August, and then we'll talk about what happens next after that, as long as it does happen. So if we breach these levels that I'm pointing out here, 2035 and the 204.50, 202 and the SPY, then there's something else working, and then maybe we did make a top for the year, and that's certainly possible. So I didn't anticipate that happening. We'll have to see how it plays out. I'm not convinced that we won't make a turn, but if we don't make it by Wednesday, I'm probably going to reassess, and that's just the way markets work. You let the markets tell us what to do, and today the market told us it's not going higher today, it's going lower. But if the market doesn't bounce, then it's telling us something. It's telling us it's weak and there's something else developing, and we have to be cognizant of that, and we have to just take it for what it is. We don't put our will on the market or impose our will on the market. We let the market tell us what to do, and right now the market's telling us it's pretty much scaring everybody away. Now, under normal conditions, that's a recipe for a buy level on a day like today, because most people are selling, and when most people are selling, you want to be buying, and that's kind of just the way it works. But there are times when it doesn't work, so we have to be careful that this isn't one of those times. I'm not convinced it's not. I'm not convinced it is. I'm watching, and right now it's going to take another day or two to be sure which way it's going to go. So we'll just play it by ear and take it one day at a time. And that's all you can do. Can't guess what the market's going to do. We have to let it show us what it wants to do. And right now, if the market doesn't hold these levels, which is a wonderful area of support, then there's something else going on, and we have to be aware of it. It's just that simple. And by the way, if in fact the market doesn't hold these levels, there's another one, okay? And this is rough because I didn't, where did it go? Ugh. You know what? Okay, hold on. I got my numbers mixed up. There it is. A 1980, it's 1980, 1975. I don't have that number refined because I didn't anticipate needing to have that number, but I just did quick math before I got on the air here, and that is the level. So that is one more level for us to be aware of, but that's way down there, and that's not going to happen tomorrow, I hope. But nevertheless, it's certainly, if this doesn't hold, that's the next level we're going to be looking at after 2000. So, meaning the number 2000, not the year 2000. Okay, let's move on and let's talk about something else, okay? Let's talk about gold. And I thought what was interesting was last night, let's go to the intraday and let's go to the shorter time frame, the 10-minute chart. Because last night, gold started to spike up, and it was actually, let's see, this is, it was all the way up here. It was all the way up at 1187.60, and then it rolled over. And I thought that that was going to be the beginning of a rally when I saw that, and I saw the markets open up on Sunday night down, and gold opened up and started going higher. And you kind of thought that, well, this was the turn. And remember, I was saying that today, or this weekend, if you will, was a turn culminating in a lot of different markets. It was gold, it was oil, it was the dollar, it was bonds. It was basically everything under the sun. It was the market. It was everything. In fact, I thought the market would turn higher, but the market accelerated lower, but everything else turned as it should have. What was interesting. So let me go back to the daily chart for a second, and you'll see here now we're moving away from slightly, not too much, but away from 1174. Now tomorrow's the day, right? If we close the month of June above 1174, I think it's a buy, and I think that just don't ask questions, just buy it. Because if we close the month of June above 1174, I'm pretty darn sure, in fact, I'm going to put it in here, that 1225, in fact, I'm going to do this, okay? I'm going to do a green line. Well, I shouldn't, it's not a buy. I'll do a different color. I'll do a brown line, and I'll make it thicker, okay? And that's just going to be an important level, all right? So I'm going to save that while I'm thinking about it. Just give me a second here so it doesn't go away. Okay. So that's what I'm seeing. So if we close the month of June above 1174, and it's not going to all happen in a day or two. I'm just saying we're going to start to work our way higher, and my target for now is 1225, and dependent upon how we get there, and there's going to be stops along the way and pullbacks along the way. It's going to take a while. It's going to take several weeks to get there. But if we get there, and depending on how we get there, we may have higher prices. We'll see, okay? But there's nothing we can tell you about higher prices now, but I can tell you 1225 would be in the cards if we close the month above 1174. So that should be good enough for now, and let's move on to oil. That's not the oil chart I wanted. This is the oil chart I wanted. Now, 59.30, we closed below it. Now remember, let's reel back the tape to Friday. And Friday, we dipped below 59.30, and then we popped back above it. And remember, I said I almost went short, and then I didn't, and we popped back above it. And then today we gapped below it, and we really opened last night. And then we gapped below it, and we're hovering below it all day. So I think there's lower prices in oil. I think we're going to go down to the 57.50, maybe even down to this double bottom here that would take us to about 56.85 or so. And until and unless we get back above 59.30, those numbers should be hit. They should act as magnets, okay? So that was one of the turns we were talking about. And maybe the gold market was also, this turning period too. So this was an important time period in all the markets. And so I think that's about it for crude. I mean, crude's pretty simple. Below 59.30, you go to 57.50. Above 59.30, and it becomes bullish again. And we'll get there when we go there, or we'll go there when we get there. Let me go to the bond market. And what was interesting in the bond market was we had a huge rally today. And if you remember, the bond market was also one of those markets that should have been a turn date around this weekend. And that certainly played out. And look where we went. We went right up into this 118.50 and then beyond a little bit, pierced through it, backed off. And that was a huge, huge move. The TLT was up 2.5% today. Bonds were up almost, at one point, the 30-year bond was up 3 points today. That's like unheard of. So that's an enormous move. So yields backed off. So now let's look at yields and remember what we talked about last week. Okay, we talked about this double top, and if we were in a bullish trend, and I said we're going to have to see if we can get through the double top in order to keep this trend intact, and the double top was absolutely just rejected. Now we'll have to see if this trend line holds, and if this trend line doesn't hold, then you're going to come right down to this 2.1 area, give or take 2.115, 2.120 is really the calculation that I've got. So I'm going to put that in for now. I'm going to put it in 2.15. Okay. and so we'll see if this trend line doesn't hold. That's the actual target we're going to be looking for, which would be much higher prices in bonds. So that played out as anticipated. And remember, we came into this double bottom, we pierced through it, was a little shaky, needed to rally today, or this was going to break down farther, and it turned. And that's just the way it works. I mean, it's pretty amazing, those turns. You don't always know they're going to work out, but they work out a pretty good amount of time. They work out better than 75% of the time. And if you look at it, I told you there was a turn coming in the dollar. Here, let's just look at the dollar real quick. Where is my dollar? The dollar was higher earlier. In fact, let's look at the hourly to get that picture for us. Okay? Look at this. The dollar opened up, right? And this was at this was like in the middle of the night, right? Opened up, and then we sold off ever since. That's a reversal, okay? Let's go to the daily chart. That's a reversal, okay? These big red candles or green candles on volume is a reversal, okay? And I've been explaining that. So the dollar reversed, the euro reversed higher, so that's another turn. So we were and are in a critical period where markets are turning. And I just thought it was interesting that the only one that didn't turn in the favor that I would have liked it to turn was the stock market, right? The stock market accelerated lower, and everything else turned as it's supposed to or should have. Quite interesting, to say the least. So if there was other markets, so it was gold, it was the dollar, it was bonds, it was oil. So that's 4. And if you take the fifth market of stocks, that's 5 markets, 4 out of 5. Where are we? That's unbelievable. It's 75%. That's just the way it works. It's pretty amazing. Okay. So let's go to, that's about it for the dollar. The dollar should work its way lower. Remember, I never thought that this was going to be the low. So we'll see. If we continue lower, then I think there's a very, very high probability that this does not hold. This bottom here and this bottom here does not hold. Very high probability if we see some follow through. All right, I want to go back to bonds for a second. There's a little story I want to tell, and it has to do with something that hit the news today, and you should be aware of it, depending on if you folks have any fixed income in your portfolios that includes municipal bonds. It's something to be aware of. So The news hit today that Puerto Rico, the governor of Puerto Rico, came out and said that there's no way they can pay back their 73 or 78, I forget which number it is. We'll split the difference, $75 billion worth of debt. Now, what was interesting about that is they were never going to be able to pay it back, just like Greece is never going to be able to pay back their debt. So I can remember a while ago when I was still with one of the large financial institutions, I was involved in a presentation to a group of investors who were heavy in Puerto Rico bonds. And the reason they were is because they were paying very, very high yields because of the trouble in Puerto Rico. So they were buying the bonds when they were down, and they were buying them because they were paying like, in some cases, 7% tax-free interest. And my point, in fact, the first slide of the presentation, and it wasn't a very long presentation, I just needed to prove to them what the ultimate outcome was going to be. And the first slide, the headline slide of the presentation was, "It's not going to happen." And those are the things that you really can't do in those large financial institutions. It's one of the reasons why I ultimately retired and, went out on my own to invest, my own money and then do what I'm doing now and kind of form my strategic forecast for the benefit of others, because I want to tell you guys the way it is. I want to tell you what I really think when you work at these firms, and that's something to be careful of. When you listen to commentary come out of these big firms, whether it's JP Morgan or UBS or Goldman Sachs or Morgan Stanley, any of those firms, they can't tell you the whole story because the legal department won't let them do it. They can only tell you, well, the markets may do this and they may do that. Well, I don't need that. I can do that myself. Anybody can say they may go up and they may go down. So when I come to the window with a presentation that starts, "It's not going to happen," they kind of, the legal guys, the compliance guys flip out, right? They don't want to see that. So the whole point is that Puerto Rico was never going to pay back their debt. And it was about a year and a half ago, they made some kind of a deal where everybody thought they were going to be fine and the bonds rallied for a while. And that's the same thing that goes on in Greece. They rally and they don't, and they rally and they're going to get bailed out. They're not, they are, they're not. It just goes over and over and over again. And it's persistently the same routine. And the same thing happened in Puerto Rico. They're not paying back. Where are they getting $75 billion to pay back in municipal debt? It's just not going to happen. So they continue to borrow. And ultimately, when you get so deep in the hole, they're borrowing only to pay the interest on what they owe, same as our federal government. It's a death spiral, but nobody really will believe it until it's too late. So, the warnings are out there, and what's going to happen is some of the bonds they're not going to all default. What they'll do is they'll renegotiate parts of the debt. So, for example, let's say one of the issues, meaning one of the municipal bonds, there's several different issues in Puerto Rico. There's electric utility bonds, there's tax revenue bonds, there's all kinds of different things. Some of them will be okay because they're revenue producing bonds. And like the electric utilities may be okay, but the tax revenue bonds most likely will not, okay? Or an economic development bond will not. So what happens is they will renegotiate part of that debt. So instead of an all-out default, they'll do similar to what General Motors did with some of the large institutional holders. They'll pay them, they'll renegotiate to say, well, your holdings are now worth 50 cents on the dollar or 60 cents on the dollar at maturity, best case. And if you hold them, that's what you'll get back. If you don't agree to these terms, we will default and you'll probably get 25 or 30 cents on the dollar. That's typically how it works in the municipal market. So that's a likely scenario. At least they'll try to do that. I don't know what the ultimate outcome will be, but even some of the bonds that are insured still won't matter because the insurers can't pay all that debt. And once Puerto Rico defaults, they'll end up seeing other defaults. So, for example, Detroit defaulted on some stuff, and there was another. There was Jackson. What was it? Was Jackson? Alabama, or I forgot already. There was an Alabama bond that defaulted. There was some other bonds that have defaulted in recent years, and it's really paved the way for these municipal defaults. So the more municipal defaults you get, the more you get. So it's almost like a snowball effect. And I'm sorry to get off on a tangent on municipal bonds, but I know that folks out there have municipal bonds. So I figured, you know what, I'll just talk about it for a couple minutes. And if it's interesting, great. If it's not, I'm sorry. But it was just on my mind, and I thought I'd just give you information that you may or may not be privy to. So I'll stop there. Other than that, let's see. We covered the stock market. We covered the bond market, gold, oil, the dollar. And I think that's what we'll do. We'll leave it there tonight, and we'll be back tomorrow, and we'll see what tomorrow brings. Normally in the stock market, let's just give a wrap. After a day like today, the likely scenario, right? The probabilities, and it's not a 80% probability tomorrow, but it's more of the likely scenario is you have more of a nothing day. You may go down in the morning, it may try and bounce back. More often than not, after a big up day or a big down day, you'll get some kind of a pause day. It won't be a big deal. And if that happens, and what happens Wednesday is if we get a big up day, that's how I'm mapping it out. If we don't, then I'm probably wrong and we'll reassess. But that's kind of the roadmap I'm going with for now until proven otherwise, okay? So it's one of those things where my work is telling me something and I am aware of the other side, but I am confident enough in my work to give it a little bit of rope and a little bit of leeway to say, well, I've been right in my career way more than I've been wrong. Therefore, I'm going to go with the probabilities based on what my calculations and what my analysis tells me until I'm proven wrong. And where am I going to be proven wrong is most likely if we close the day below 204.50 on the SPY. And to translate that to the E-mini contract, it's 2035. So if we close below 2035 or 204.50 in the spider, then that's where I'm going to probably say I'm wrong. But until that occurs, I'm still looking for a rally to begin latest on Wednesday. And that's the story, folks. So that's it for today. I'm David Frost, My Strategic Forecast. Thanks for tuning in. Hopefully it's been helpful, folks.